Hey, so have you heard about VA assumptions? I'm hearing it in the marketplace. I'm seeing buyers thinking that I'm just going to assume this VA loan, and it's a great opportunity, right? Sounds fantastic. Interest rates are at 6.75% to 7% or so, depending on your credit score. And these loans are at like 2.25%, 2.5%, maybe 2 3/8. And you want to achieve that home at that low interest rate. Well, there's a little bit more to that process and a little bit more to understand. So that's what we're going to talk about in today's video. So if you are considering selling your home using a VA assumption or buying a home with a VA assumption, then stay tuned. Hey, Laura Gallen here with Mountain Prairie Living, Colorado Springs Realtor, and welcome to my channel where I answer questions about the home buying and selling process, talk about Colorado Springs, this fantastic place I get to live in, and neighborhoods of Colorado Springs and what to do around town. And if you are moving to Colorado Springs, then subscribe to the channel. And we're going to talk about the VA assumption from the buying side as well as the selling side. So let's get into that a little bit. Let's start with the buy side, because I think this is where most people are excited. I can assume a VA loan and pick up this house for a lower payment per month. But there are some details and some processes that you need to fully understand. So let's start with that. So let's talk about buying. So there's a house on the market. Your buyer's agent is telling you that the listing agent is indicating to you that you can assume this loan. It's maybe 2.5% interest rate, and the payment is a certain amount depending on it. Let's take a price point of a home that's $300,000 or $450,000. Homes $450,000. The loan that you're going to be assuming is about $300,000 balance. Well, there's a gap, right? There's a $150 gap. Somehow you need to come up with the money to purchase the home at $450,000 and assume this VA loan. So the gap is something that's important to understand from the buyer's side. So how can you do that? Well, the simplest way to do this from a VA assumption situation and purchasing that home is to apply for the VA assumption. It has its own parameters. It has a minimum credit score of about 580, but depending on the loan servicer, they may have some overlays that require more of a 620 or 640 credit score. They also have a parameter of 45% debt to income ratio or less. And if you'd like to know more about what a debt to income ratio is, how it's calculated, then you're going to check out the video at the end of this video for that information. And then, of course, they need to know where your down payment's coming from and all of that information. So they're going to process an assumption for you. That $150,000, the easiest way would be cash. You're going to put it down as a down payment. VA is also going to require you to put 0.5% of the purchase price as a VA funding fee. So, and then additional closing costs and such will incur. So that's the simplest way to do a VA assumption. Now, if you are a VA or military personnel and you have a VA certificate, the seller is likely going to ask you to do a VA exchange of certificate of eligibility. So they're going to remove their certificate of eligibility from that loan that you're assuming. You're going to put your VA certificate of eligibility on it. So that will happen in the process. If you are a non-military member and the seller is allowing you to process an assumption, they need to understand that that certificate of eligibility for the seller remains on that loan. They can't ask for a release of liability for the loan because you're a non-military person. When you refinance it, they can, in the future, if you were able to buy it that way, they can remove their VA certificate of eligibility when it's refinanced and paid off. They can go request a new certificate of eligibility. So that's the simplest way from a buyer standpoint. But if you're a buyer and you need to have a second trust deed to pay for some of the closing costs and down payment, this is important to understand. Two parts that are most important. One, a second trust deed is going to have a higher interest rate. So if our interest rates are at 6.75% to maybe 7%, depending on what you buy down or what your credit score is and so on, that second trust deed currently is about 9% or more. So that difference, so in this example I'm describing, it's $150,000. So maybe $120,000 is what you need to come up with to do the balance plus your down payment. So that is going to be at, say, 9% interest rate. So you need to qualify for the assumption, and you need to qualify for the second trust deed. And you're going to ask VA to subordinate that second trust deed, and they have some parameters that loan has to meet before they agree to subordinate that loan. And of course, that process to get that approval for subordination to close on that transaction may take a little bit longer for you. So you have to understand that if you are going to use a second trust deed, there's a couple more pieces in there that you need to work through and understand. And your debt to income ratio with a 9% loan on 120,000 may come off the rails a little bit. So from the buy side, that's what you need to understand about that type of assumption and that gap between the loan balance and the purchase price. So let's move to the seller side. What does it mean for the seller? So we just discussed a little bit of it. From a seller standpoint, if you're going to sell to a non-military member or someone that would not qualify for a VA loan any other way, they can still try to assume it and process it. You need to understand that you will not get a release of liability from that loan, and you will not have your certificate of eligibility released until that buyer in the future refinances the house and removes that loan, and then you can apply to get your certificate of eligibility back. So that's from a non-military person. And of course, they would need to come up with all of that other information that I just described from the buy side. Here's another part. If you are going to allow another military member to apply for this assumption, two things you need to understand from the seller's standpoint. You need to make sure your contract is clear that you are going to be doing an exchange of certificate of eligibility between the buyer and the seller for the loan assumption of the seller's current first trust deed VA loan on the property. And then you, the seller, are going to also ask the lender to release your liability from that loan. And that's a conversation you have with the lender after this transaction is closed, or somewhere in the middle of that loan assumption, that you're requesting that they release your liability. So that way the new VA or military member will have the loan assumed with their VA certificate of eligibility, and they are responsible, they are liable to that loan. So those are two parts. As a seller, you need to make sure that you understand that and communicate that's what you're going to do. From the buyer's side, whether it be military or non-military, that gap situation is still going to have to transpire. So in today's market, truly, while it sounds like a fantastic opportunity, and it is, the best case scenario will be when the loan balance is close to the ask price, or whatever the loan balance is, the difference, the gap, the buyer has in cash. So those are going to make a VA assumption flow a little bit quicker, and of course be beneficial on both sides, depending on what the buyer or the seller needs. I hope this information was of value to you. If you're going through a VA assumption, I would love for you to comment below and let us know some of the challenges or any pieces that you might want to add to the community, to let them know what you went through or what to not forget. But from what I've been gathering information-wise from a variety of different avenues, these are the details of information. I'm also going to post a link to the VA website on the second trust deed and what they require, so that you can look it up if that is something that you want to do. It's so important to understand the process so you don't feel like you don't know what's going on. You feel like you're in control. You know what your next steps are. And if your listing agent or your buyer's agent don't fully understand it, share this video with them or share this video with anybody you know that's out there. I really want to help people get through this process, be as least stressful as possible. I'm so glad you watched this video. And as I said, if you'd like to know more about the debt to income ratio and how it's calculated, then check out this video next. I'm so glad you were here. Thanks so much for watching, and I'll see you on the next video.